As 2026 could bring a host of tailwinds from the One Big Beautiful Bill Act, specifically in the way of tax cuts. Joining me now is Wealth Enhancement Group Senior Portfolio Manager, Ayako Yoshioka. Boy, I hope I didn't completely murder your name there. I so apologize. Well, let's just jump right in here. Consumers are expected to get a bump from tax refunds, as you know. But you note that may not move the overall consumer needle on spending. So how do you foresee these refunds impacting the economy?
Sure. Hi, Jerry. Thanks so much. And totally fine about the name. In terms of the consumer, we really think that there's been two areas of the consumer. There's been the really wealthy consumer that has been just fine and has actually benefited from higher interest rates. And then there's been the consumer that has really struggled with inflation being so high for so long. And lowering the interest rates really hasn't helped them out so much. But we do think as we look into 2026, that the One Big Beautiful Bill and some of the sort of impacts that you're going to have from a tax standpoint are going to put a little bit more money back into most consumers and the average consumer. And so we think that's going to be a positive as we look into 2026.
What's interesting is that consumer sentiment is weakening. Overall consumption, though, remains high. Is that why you're picking Visa here?
Absolutely. I think when we look back at 2025, the consumer didn't do so well. It was probably one of the worst sectors. I think it was the third worst out of the S&P 500. And I think, again, a lot of this, consumers were bombarded with high inflation, with the tariff issues. And so they were really reluctant to spend. But again, as we look into 2026, I think they'll start to nibble back in. And especially as, wage growth kind of keeps up with inflation, and or if inflation does actually surprise to the downside, that's actually going to be a benefit to the consumer as well. And Visa is a huge beneficiary there.
I feel like all we talk about on this network is housing affordability concerns, many homeowners being locked into low mortgage rates. But you say home improvement retailers stand to benefit as maintenance issues need to be addressed. So is that why you've chosen Lowe's as a pick?
Absolutely. So I think the, aftermarket for maintenance and for home maintenance is going to continue to be a large market. I think currently it stands at around $20 trillion. And, as homeowners stay in their homes longer because they're locked in with those low mortgages, all of those maintenance issues kind of crop up, and Lowe's is going to be a big beneficiary. They've also done a lot to increase their share with pros, those small and medium-sized pros who are going to help you out with some of those slightly bigger projects.
I can relate to that. GE Vernova is another of your picks. It's starting to lose some steam, though, after a solid year of gains. Despite getting upgrades from Jefferies, UBS, Wells Fargo, is this stock still a buy here?
We think so. I think from a visibility standpoint, you have so much visibility into the next several years, almost into the next decade, in terms of, their backlog and the growth that you're seeing in both revenues and in margins. Again, this is another sort of AI play from a thematic standpoint. And the stock really hasn't done too much for the last few months. And we do think that this could be another, it has another leg up in 2026 as that visibility continues and as that backlog grows.
All right. Well, thank you so much for coming on today. Appreciate your time.
Thanks, Jerry.